Hello, 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 hello. Welcome to our next chapter, that is your levy and exemption. So now we started with custom, then this also we'll finish it as quick as we finish GST. So starting with customs, you have to understand two basic terminologies. First is what is your Indian custom waters, and second is what is Indian territorial waters. So what is Indian custom waters? So Indian custom waters is 200 nautical miles from the baseline. It is 200 nautical miles from the baseline. So this is your India, okay, and there is water over here. So 200 nautical miles from your this border is your Indian custom water. So till this area, anything that enters or exits, this is your definition of your Indian custom waters. And the same thing for Indian territorial waters. Indian territorial waters is 12 nautical miles. So Indian custom waters is 200 nautical miles and Indian territorial waters is 12 nautical miles. So it would be somewhere around this much. So all of your entire this region will be your Indian territorial waters, and your entire region, your full entire region, this will be your Indian custom waters. Okay, so Indian custom waters is 200 nautical miles, whereas your Indian territorial waters is 12 nautical miles from the baseline. Okay, now what is their significance? So in Indian custom water, that means 200 nautical miles from the baseline. Anything in this region can be stopped, searched, arrested, and goods can be confiscated. So any vessel or anything which is within this boundary of 200 nautical miles can be stopped, searched, or arrested, and goods can be confiscated. While Indian territorial water, that is your 12 nautical miles, this is actually your tax line, the thing that I drew in red. That is, goods become taxable if they enter or exit the territorial water. So this is your actual custom boundary. So even though this says custom water, do not get confused, only you will be taxed. So how you will remember this? C for custom, C for confiscated, T for territorial, T for taxable. So Indian territorial waters, T for territorial, T for 12. Okay. So T for territorial, T for 12, and T for taxable. So goods become taxable if enter or exit the territorial waters. Only then your custom charges, your custom tax will be applicable. Okay. Now next is your importation of goods, re-importation of goods. Okay, so re-importation of goods. So there are two cases, that is when goods are exported and duty payable if goods are re-imported. So if you have exported goods, if goods have been exported for repairs abroad, so you had goods in India. Now what have you done? You exported these goods outside India for the purpose of repair, so that the person in abroad will repair this machinery or whatever it is, and then you will re-import it. Therefore it says re-import, because you had exported and now you are re-importing. So in such a case, under claim, so how are you doing? You are doing it under claim for duty drawback, refund of IGST, or you are doing it through bond without payment. So in such a case, there are some conditions that have to be followed. So first is re-import within 3 years from export. So from the date you have exported, it should be re-imported. It should be brought back to India within 3 years, which can maximum be extended for another 2 years. Therefore, I have written as 3 plus 2. So 3 years plus maximum 2 years. And the same goods should be re-imported. That means the goods that you have exported outside, those same goods only should be re-imported. Okay. Next, goods exported. So if goods were manufactured in India and re-import purpose, so your purpose for re-importation is for repairs or reconditioning. That means originally the goods were manufactured in India, then you exported these goods. That means you sold it. Now if there are some conditions, there are some repairs that have to be done, so these goods are being re-imported. That means you are re-importing for the purpose of repair or reconditioning. If you are re-importing for the purpose of repair or recondition, time limit to re-import is 3 years. You have to re-import these goods within 3 years from the date of making sale, that is from the date of export. However, this 3 years will be read as 10 in case of Nepal. Okay. And if these goods manufactured in India, if the purpose of re-import, so originally these goods were exported, now you are re-importing for the purpose of reprocess, refine or remake. So over here, repair and reconditioning have a period of 3 years, while reprocessing, refining, remaking only have a period of 1 year. That means they should be uh, re-imported within a period of 1 year. Okay, what are the conditions? That is goods to re-exported. That means first you exported goods outside India, then you re-imported for these two purpose or these three purpose, you re-imported. Now when you export goods to be re-exported within 6 months from the date of re-importation, which can be maximum extended for another period of 6 months, and the importer shall execute a bond. Okay, so I hope you understood the story. First you made goods in India, then you exported the goods outside India as a purpose of sale. You sold the goods, you exported them outside India. Now if you want to re-import these goods, your re-importation will be only allowed for a period of within 3 years. 3 years from the date of actual export, you will be allowed to re-import if it is for these purpose, that is your repair or reconditioning, then you have a period of 3 years. But if it is for a process of reprocess, refine or remake, in such a case, within 1 year the goods should be re-imported. Okay, now I have re-imported the goods. Now is there a time limit to re-export these goods also? Yes, there is a time limit, that is your 6 months, which can be maximum extended for another period of 6 months. Okay, great. I hope this is clear to you. Most of the students get confused over here. Okay. Now, if under claim, if the goods under claim for duty drawback refund, amount of incentive availed, this will be your duty payable. So the duty payable if goods are re-imported, that will be your amount of incentive availed at the time of export. So while you are making the export, this is the same case. So if while at the time of making export, if you got a duty drawback or you got any refund, so whatever incentive you had availed, this you will have to repay. And if goods are exported for repairs abroad, so if goods have been exported for repairs abroad, and then if you are re-importing these goods, in such a case, what will be the duty payable? It will be the fair cost of repairs plus cost of materials used plus insurance and freight, both ways. What you have to remember, they will give an example that these goods were already under warranty, so the supplier didn't charge you anything. So in such a case, you do not have to add 0 rupees. You have to add the fair cost. That means you have to add the fair value of repairs. You will have to add, because that will be treated as import. So this is the duty payable, that is fair cost of repairs plus cost of material used plus insurance and freight, both ways. Okay. Concession is not applicable if re-imported goods have been exported by 100% export oriented unit or unit in your FTZ. And next is your from a public or private warehouse. In such a case, your concession will not be applicable. Okay, another thing that you have to remember, any goods derelict, jetsam, flotsam or wreck, that means anything that has broken into sea, any bits and pieces, if they float into the Indian territory, coming into India shall be treated as import. Even though they are not coming by a conveyance, it will still be treated as import. Procedure for allowing imported goods for job work. So intimate to the jurisdictional customer office, specify the job worker name, quantity of goods, nature of work to be carried, goods sent to job worker with challan, and maximum period for job worker will be 6 months. Okay, next is your rule 10, that is re-export of goods. What we did was re-import of goods. Now we are doing re-export of goods. That is any unutilized or defective goods. So any unutilized or defective goods can be re-exported within a period of 6 months. That means, for example, you imported some goods. You bought some goods, and now you find out that both these goods are I am not going to use them, or they are defective. So in such a case, you can re-export them within a period of 6 months from the date of importation. What is the condition? That the value of exported goods shall be greater than the value of your imported goods. Next is unutilized or defective goods can be cleared within 6 months on payment. Okay. So defective goods, it's not utilized, it should be unutilized. So unutilized or defective goods can be cleared within 6 months on payment of how much? That is your duty leviable minus duty paid plus any interest component. So what is the actual duty leviable minus the duty that you've already paid plus your interest amount. Next is capital goods, clear ones used for specific purpose on, of course it is the same over here, payment of duty leviable minus duty paid plus interest on your depreciated value. Okay, now some conditions have been given. So on first year per quarter is you have to subtract 4%, 4% per quarter. Then second and third year is 3%, fourth and fifth year is 2.5%, and thereof it is per quarter 2%. Okay. Now the date for rate of duty. So this is very important. That is, what date do I have to consider? What date do I have to consider for rate of duty? And what date do I have to consider for exchange rate? Because these transactions may happen in dollar, may happen in Singapore dollar, etc., etc. So therefore, you need to know that on what date, because the rate of duty also changes. So what date do I have to consider my rate of duty as, and on what date I have to consider my exchange rate? Very, very important. A lot of questions are asked from here. So for rate of duty, for the purpose of rate of duty, when goods entered for home consumption, when the goods have entered for home consumption, it will be later of presentation of bill of entry or arrival of vessel. So arrival of vessel, that is when entry has been granted to vessel. It will be earlier, it will be later of presentation of bill of entry or arrival of vessel. And if goods are cleared for home consumption from warehouse, so if goods are directly cleared for home consumption, you have to follow this one. If goods have been cleared for home consumption from warehouse, that means goods were first kept in a custom bonded warehouse. No tax was paid, nothing. Now the goods have been cleared for home consumption from the warehouse. In such a case, it will be the date of presentation of your bill of entry. So over here, what you have to remember, it is later of presentation of bill of entry or arrival of vessel. That is when the entry was granted to the vessel. Okay, this is for your date for rate of duty. Now, what is the date for exchange rate? What is the exchange rate you have to consider? CBIC, they will give you different exchange rate also, RBI exchange rate, CBIC exchange rate, etc., etc. You only have to use CBIC exchange rate. Okay, for the purpose of import, which date you have to use for the purpose of import? It is a date of filing of entry under section 46, and for the purpose of export, it is date of filing of shipping bill. So for the purpose of export, it is date of filing of shipping bill. For the purpose of import, it is date of filing of entry under section 46. Okay, next is your last part and very important part of this chapter is your remission, abatement and exemptions. Okay, just a second, I'll scroll down. Perfect. Yeah. So remission, abatement and exemption. So there are basically three types of losses that can happen to your goods. One is pilferage, second is remission, and third is abatement. These are three scenarios where you need not pay tax, or you have to pay less tax. So if there is any pilferage, means stealing in small quantity. So if there is any stealing in small quantity, whenever the question says that there is some quantity theft or something has been stolen in small quantity, your mind should automatically go to pilferage. So in such a case, you do not have to pay any duty. You do not have to pay any duty on the goods that have been stolen. If you have 100 quantity and one good has been stolen, it does not mean you do not have to pay any duty on the 99 also. You do not have to pay any duty on that one good, but you will still have to pay duty on the 99 goods that you still have. So there is stealing in small quantities, there is no duty. Okay, now there is a time period that this stealing should have happened between what and what. So it should have happened after unloading. That means after unloading from the ship onto the dock or to the warehouse, after unloading, but before order for clearance for home consumption. So before the order for clearance for home consumption has been passed, if it is between this period, that means after unloading but before order for clearance for home consumption. Okay, over here it is order and over here it is actual. So please make sure you hear the word carefully. When order for clearance for home consumption or for warehouse has been given, it should be between this period. However, if the goods have been restored, that means if the whoever person is responsible for loss, if they restore you the good that was take these goods instead, in such a case you will have to pay duty. Okay, now your remission, the words are very 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 important. Remission, only and only if the question says lost, destroyed or abandoned, only and only if the question says lost, destroyed or abandoned, these particular words, only then it will be remission of duty. Remission of duty means it is refund of duty. That means first you pay the duty and later they will refund you the duty. Okay, now it should be before. It should be before. There is no condition of after, just there is a condition of before. That it should be before actual clearance for home consumption. Before the goods have actually been cleared for home consumption, if it is due to loss, destroyed, or abandoned. Okay. Now this is also applicable to warehoused goods. Just that actual clearance for home consumption should not have taken place. And last is your abatement. So in case of abatement, if your goods are damaged or deteriorated, if your goods are damaged or deteriorated, then in such a case, duty on goods before damage, you have to do a pro rata calculation. That is duty on goods before damage. That is what duty you actually originally had to pay on the goods. You will multiply by the value of damaged goods upon value of goods before damage. That means what proportion of your goods have been damaged. So therefore value of damaged goods upon value of goods before damage, this is your ratio of goods that have actually damaged. That means, for example, say 30% of your goods have been damaged, so you will get a abatement, you will get an abatement of 30% of the duty that you were originally liable to pay. This is what you will get an abatement for. Now this should happen after unloading, but before. Before, in this case it is during loading, and over here it is examination by your officer before your actual clearance. So it should be before the officer examines for actual clearance. In such a case, if it is abated, only then your abatement will be given. That means if goods are damaged. Loss should not be due to negligence or default of the importer. That means there should be no fault of the importer, only then will you get abatement. Okay, goods can be relinquished before order for home consumption or warehouse. Relinquish means you can give up the right that, boss, I do not want these goods, you can keep these. I don't want to pay any duty. Whatever amount I have to pay to the supplier, I have already paid. You keep these goods. I don't want to pay duty only. And second is denaturing or mutilation of goods can be done for goods with multiple uses. Because what happens? For example, your ethanol is also used to make alcohol, and it is also used as a nail polish remover. Okay, so your ethanol is used for two purposes. Now, for example, if your alcohol has a different duty rate, and your nail paint, the ethanol used for nail paints has a different duty rate, but this ethanol is used for any purpose. So in such a case, what will the officer do? If you tell him that no, sir, it is not for alcohol, it is for nail paint, because nail paint has a higher duty, has a lower duty. So you'll tell him, no, sir, this is not for alcohol, this is not for human consumption, this is for nail paints. So what will the officer do? The officer will add something to ethanol so that it will be unfit for human consumption. So that now, since you've told me that you are going to use it for nail paint, you will only be able to use it for nail paint. So therefore, that is denaturing or mutilation of goods can be done for goods with multiple uses, to ensure that for whatever purpose you are saying, these goods are only and only used for that purpose. Okay, and with this we are done with this chapter, and I'll see you in the next chapter, that is your types of duty.